Hi, my name is Kieran Patankar. I'm President, CEO, and Director of Maple Gold Mines. Maple Gold Mines is a Canadian advanced exploration and development company focused on disciplined exploration and development of our district scale gold projects located in the Abitibi Greenstone Belt in Quebec. Delighted to be here to see you, Matthew.
I'm glad you're here as well. Right, we obviously saw the press release the other day. Let's start with some numbers there, but I kind of want to get into understanding what you're building up here. I mean, these results obviously help a lot, but let's start with understanding what you put out.
Sure. We released on Tuesday of this week. We released 16 holes from our 2025 winter exploration program at Douay. Recall it was the first exploration program that the company had undertaken, certainly under new leadership. But really, most substantive drilling that we've done on the property with an established resource base, all the things that we already know, in almost 2 years. The first holes that we released came out in April, and we had some barn burners, including hole 338 at the Nika zone, thick, high grade intercept in a bold 300-meter step out. I think we surprised a lot of people. We followed up on that with additional thick and high grade intercepts in both the Nika zone as well as the 531 zone. So again, if there's a proof of concept here, trying to test and explore and sketch out potential high grade extensions of the deposit, we've discovered that both. The high grade results we had at Nika, it was a 2.9. The meaty part of the intercept in hole 54X was 2.9 grams over, over 20 meters, so 60 gram meters ish. We know where we're going with that zone in terms of where the plunge extensions. We drilled a number of holes, all of which hit gold, so lots of smoke there. But 531, three out of the five expansionary holes, big step outs as well, yielded high grade results. The key one was almost 5 grams, 4.9 grams over 15 meters in hole 351. We also hit 11.4 meters of 3.7 grams and 10.8 meters of 3 grams in holes 352 and 349, respectively. So there are other zones here where we could talk about as well, but those are going to be key focal areas for us to really add potentially a series of high grade underground deposits to help scale up the asset and get us to a very nice looking potential mine plan here very shortly.
Just in terms of the setup, right? Because I think obviously 338 was a barnstormer, but just remind people of kind of the geological and structural control driving this high grade intercepts that you saw there, just so we kind of put it in context first.
Sure. So listen, we're in the Abitibi, and I think the market, your audience would know that in the Abitibi you have these big deposits like Malartic, like Detour, Casa Berardi, obviously just the west of us. You have also these high grade, deep mines that seem to go forever. So there seems to be there are a few characteristics. There are these bigger, higher grade vertical trending. There's more continuity in the vertical sense, the Larons, the Goldexes that seem to go forever. And then you have these, open pit, Abitibi, 1 gramish type deposits. We have the latter really here at Douay right now. But one thing about Douay is it's related to a very interesting alkaline porphyry intrusive. And it's intruded along a major first order structure in the Casa Berardi, which it straddles. So there's an endowment there's a high hit rate typically with those alkaline porphyry intrusive gold related gold systems. They're rare in the Abitibi. They're older than the typical sort of tertiary age, younger, Cripple Creek and Porgera and some things that, they're obviously successful. But what we have here is we've got, an intrusive, but we've also got a major structural corridor. We've drilled all oriented core as part of this program. Again, and that was part of the plan when we spoke with our partner, in the summer last year, is really validate a structural model with good oriented core and do a proper deposit scale, structural validation. And these appear to be, they're subparallel, subvertical gold zones that appear to be structurally controlled. Right. And then the Nika zone, certainly we see it as there's a lot of brittle deformation, a lot of breccias, things like that. It's not your typical porphyry style of mineralization, which we see in what we call the porphyry zone, right? 55% of the resource sits in the porphyry zone. That's typical. But on the periphery of this, you see rock that's been highly altered, shattered, broken up. And both 531 on one end on the eastern side and Nika on the western side, they're both sort of in what we call these sort of pressure shadows, right? They're on the corridor where we see strike slip motion. We have a geologic map on our presentation, and this is where you get these, faults and shallow folds that can be controls on the higher grade.
Okay, so those kind of alteration corridors and plunge direction kind of, I guess you get a better sense of future targeting. Well, tell me about the 3D modeling. I mean, is that a kind of iterative process, or if you can, is that set in stone?
No, it's absolutely iterative, and the team has
Right.
done a
Okay.
fantastic job. I mean, when you drill, 12,000 meter program, we started with 10, we went to 12 because of efficiencies and success, and the amount of data that we've been able to glean from this is obviously, we've gone through process. We're continuing to look at. We're getting back here, so obviously as early as this fall, so the model is being updated, but I would say that the validation of a year's worth of technical reset is clearly there in this program. And that's what we're talking to. I have a conversation, it's ongoing, but I have a detailed conversation with, some key people, obviously to our story. And I think there is generally there's happiness not just about the results themselves, which I know the market really pays attention to. What is the actual assay result, and did it compare to 338, and what did the market think, et cetera. But when you have consistency, when you hit gold in every hole, when you are doing bolder step outs, like hitting gold in every hole, or even talking about number of meters drilled. Some people are drilling deeper because their deposits are deeper. Some people are doing infill drilling, right? We were doing, bigger step outs to validate a model that is created by a new team with a new approach, and having 100% success rate while executing properly, being under budget, having a great, sort of cost saving and safety performance, all that stuff. That's important to, when you have a major partner, those things are important, right?
Yeah. 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 They're going to judge.
Yeah.
Just in terms of all those kind of follow up holes from 338. I mean, how are they kind of helping you, and how are they giving you confidence with regards to continuity and potential tonnage?
Yeah, that's the key thing, right? Because I think when you look at, certainly there were some higher grade portions within even the 338 intercept, right? You saw some, 17 meters of, 5 grams. Like those are underground mineable at $3,300 gold prices, all day, every day, right? So the goal is to find both, mineable grades. And if you look at, similar deposits, particularly in our region, the Abitibi, I mean, 2 to 3 grams with enough tonnage underground at these gold prices, it works, right? And again, I like to have that kind of a debate of, but what is the grade that's going to ultimately, make the cutoff from an underground or an open pit standpoint? But what we have with Nika in terms of continuity is, we tested step outs to the east, west, down plunge, up plunge, and in every hole we hit gold, right? And so, you're looking for in these systems, again, Dewey is not perfect. You can't just draw. I think most people would like to draw a straight line from hole 338 to, hole 282X, which was the previous best hole, which was within the pit, as we talked about in our last conversation, and say, okay, there's a straight line corridor. They're just drilling along. If they find it, it's success. If they don't, it's not. It's a corridor, Matthew. It's a corridor of mineralization. There is, as I said, there is a structural influence on it. And so it's orientation, it's vectoring, it's geometry. And when you see what we got in hole 54X, which was, again, for efficiency, instead of drilling a hole from surface all the way down to the zone that we were targeting, guys are efficient. They went and they found a hole that was stopped too short of a zone that we've now modeled. So getting back to your question about 3D model, there are other holes like this in that Nika zone where we can go in, we can deepen the hole. We deepened hole 54X from roughly 300 meters where it stopped and really didn't have much to speak of. We went down to almost 900 meters down hole, and we hit, a very nice zone that gives us a lot of enthusiasm and optimism and excitement to go stepping out in that direction, which remains completely open, as well as other directions, sort of, along strike, as well as down plunge, and there are other extensions that we can do at Nika.
You raised a really interesting point about how you kind of set these companies up for success, right? When you're looking to have grades like this, and you've got multiple zones. We talk about Nika zone and obviously 531 zone, etc. You've got this kind of deeper play, and you've kind of got, well, I guess potential, for shallower, porphyry hosted zones as well, probably. But we're seeing the market a market narrative, which is where companies are trying to tell a nearer revenue story, where they're trying to say, well, is there a kind of a starter project versus a bigger play? You got 3 million ounces plus here, and you can keep going, right? But what does an Agnico Eagle want from something like this? What do you think you need to do if you want to be or have the potential of a standalone play? What do you focus the drilling on as a result? Because you're kind of spoilt by choice, it seems.
Yeah, listen, I mean, I think really in terms of what's going to drive our shareholders' value, right? In this, and I agree with you that there is a narrative in a higher gold price environment to try to drive a development production story that's tighter, that's less capital intensive, more efficient, and can pay back its capital quicker. Maple and Dewey have always been, a bit of like it's an exploration company, right? You've got Agnico here because the Dewey-Joutel system has all the elements of a prolific, district scale, large scale deposit camp, but you need time and resources to express the full potential of that, right? Which is why having a partnership is so important. We see broad potential here. There's certainly, going to be, and we're actually doing right now this summer, some things that are going to help us on the regional exploration side. But at Dewey itself, because as you mentioned, we've got 3 million ounces to start with. Instead of just going and taking this $10 million raised last year, as part of the reset and drilling infill drilling in the 3 million ounces to just deliver, gold, but maybe more, 1 gram type intercepts or, lower grade intercepts and sketch in that we're going with a mine plan on the 3 million ounces. I think we can be better, right? I think there is potential to substantially increase that resource. Again, as I mentioned, we're one of just 20-ish companies that 100% owns a multi-million ounce, 3 million ounce plus potentially open pittable project in Canada. So it puts us in rare territory to begin with. We went and did boulder step outs that again I'm seeing a combination here on a potential mine plan coalescing, and I'm not looking for just let's mine the entire open pit 3 million ounces and just build something that is $1 billion plus capex and massive throughput. And because again that stretches credulity when you're a 40 million market cap company, right? Even if you do have a big elephant in the room in terms of a partner, I think what you need to do is now with the 100% approach, which is what we did by restructuring the joint venture. We have the ability to, if we put out a 1 to 1.5 million ounce mine plan within the next, potentially, 6 to 12 months, that focuses on, a combination of open pit, with incremental bulk underground, step outs that are showing that there are zones. I think you want to see a large drill program, which you're going to see, and investors are going to see here going forward based on the success that we've had. We want to grow the resource to 5 million ounces. That's still very much in play, and we're going to be getting there, I believe, with this next resource update coming at year end. But the point of the resource update, the point of adding growth and through the ounces, through the drill bit, it's also to produce something that is ultimately going to be economic, right? And so you don't rush a resource update. You do a proper geo mine met model that can underpin, scoping studies, PEAs, so you're confident that, you can, that the ounces are there, that they're at the grades you think they are, that they have the right metallurgy so that you can put out a PEA. You don't have any negative surprises as you go farther down the road. That's how a larger company would do it, right? So I don't necessarily want to put forward a large company mine plan. And very few, I should just say one thing too. Very few assets in this part of the world, Quebec, Ontario, start out of the chute with 350,000 ounce per year mine plans. I mean, that is sort of Agnico, Kinross, major company size. We don't need to do that because a mine plan at even assuming a conservative gold price estimate, from a $3,300 gold price today, if you're starting to produce 100,000 ounces a year at, potentially 2 to 3 grams on an optimized mine plan, potentially here for us starting at Dewey West, where we have, 500,000 ounces of indicated at 2 grams. We've got some other zones around it, Northwest Zone, Nika Zone, et cetera, where you could certainly circle potentially 1 million ounces. Higher grade, tighter, more efficient mining is still going to get a significant amount, in terms of NPV, IRR, all those other things. And I think that's where the potential sort of second re-rate outside of just good exploration is coming for the company.
Okay, so there's the quick win. If you're going after higher grade, I guess that achieves a lot, and the type of drilling you describe, it achieves a lot. What is the scope for lower grade resources, like low grade halos, around these high grade cores? What does that do for a story like yours? And do you pay any attention to that now, or does that come later?
Well, I think the simple answer to that question, I like to give you just a one-liner here, is that I think we already have years, call it 5 to 20 of mine life already, right? What we're looking for are years 1 to 5.
Okay, so bulk tonnage comes, and you will work out whatever kind of cutoff grade needed for that interpretation. Right. So right now, the years 1 through 5. Why is that appealing to an Agnico Eagle? They've got a balance sheet. They surely they wanted just a nice big efficient project. Doesn't matter what it looks like. Years 1 to 5 for them, does it?
Yeah, listen, I think, with there is a stated, goal here when I said it was a win-win transaction for us last year. We know that this is going to need larger exploration programs, as I said earlier, to realize the full potential of the system. Now, if you're a junior company in this market, subject to the whims of the capital markets, and you're trying to put together, 25,000 meter, which is our goal, 25,000 meter, expansionary drill programs on an annual basis, you can do that one of a couple of ways. You can continually go back and dilute shareholders at, sometimes lower share prices and call those death spiral type financings, or you can do them more efficiently and do them with lower cost of capital because the market is giving you value instead of saying, look, I don't see the potential at $8 an ounce, which we trade at currently. I would argue, and certainly I don't, arm wave and say, oh, we should just immediately re-rate. We have to show a path that those ounces, if the peer group average for total resources in the Abitibi is 20 to 25, there's a quality filter here that's being assessed. I think if the peer group average of $40 an ounce US for mineable ounces, is I think a reasonable target for us as well. I have to show a path for our ounces and get that re-rate so that we're able to raise money at lower cost of capital and larger amounts and attract. Like, scale matters in this business, as you know. It's harder to raise smaller amounts than it is at bigger amounts. We have all the potential here for bigger systems and bigger type programs. And why does that matter for any shareholder? Not the least of which is our partner. Is we want to do things that are going to grow and add value for Maple and Maple shareholders, but also are in the interest of the long-term development of the Douay and Joutel projects, right? And so, what is the best interest of the Douay project if it does have the potential for, you got 3 million ounces at surface, if it does show a potential significant depth extension, right? Which, is been shown in the Abitibi. Malartic has shown it with Odyssey and Goldie, Detour underground. There are others, certainly that are showing this type of development potential underground. If we can demonstrate that that exists, and we've started, it's early innings, right? We've just, it's tip of the iceberg type exploration that we've done. If we can show that, I think that is where we really get bang for the buck. But why a smaller mine plan works right now? Because of the gold price. Because sometimes these projects you have to start with 100,000 ounce mine plan. I think even Malartic and these projects were previously they operated at that lower production threshold because you're making them less capital efficient. You're paying back the capital, and then you're getting into almost a self-funding exploration model, right? And for us, I think that, for most juniors, I mean, I think showing a path to getting there is innovating as opposed to we're just going to put out, one or two drill holes, get the market, crowing and, take advantage of higher share prices, just raise more money and keep going that way. I think that's certainly something we wouldn't mind if we hit a screamer drill hole as we did in 338. But I think this type of model with established ounces with a good partner, I think it's very sustainable. And again, I think no one has seen yet that economic study, that resource update, which is coming later this year, which we think is going to underpin the strategy.
Okay, yeah, it makes sense. Okay, last
Does
time
it? I mean, if you want to follow up, like for sure, come back to it.
No,
Like let's.
I will. I'm processing, but before I do, I need to remember what I wanted to ask you when halfway through that response, which was like, I think last time we talked about the lithological and sort of structural controls sort of driving the mineralization, right? And I guess what I'm interested in now, because you're kind of getting to the smart end of this in terms of your sort of structural understanding driven by, well, what's it driven by? I mean, you kind of got, I guess, oriented, core data, or, alteration modeling and so forth going on. And I think you've started a process of relogging, like, was it 20,000 meters? I can't quite
Yeah,
remember.
it's almost up to
It's like
30,000 meters now. I mean, that's
30,000 meters. Wow. Okay. So how is all of that historic data, and how's all that other work in terms of refining the target modeling? Are you going to get better at finding the high grade stuff as you move forward?
I can't, Mother Nature gives what it gives. I can't guarantee anything, but what I can say is we control process, right? And we've done that with success here with this first major program at Douai in the last couple of years, first under the new team. The way we've approached this rethink of the project and way we will approach this going forward, the best tool that a geologist has is their observational skill, right? You can put everything you want into a computer. I know we live in a day where people, don't remember what an old stock ticker used to actually look like ticking out paper, right? Where people don't know how to write with a pen and pencil or write a thank you card, right? Everything's done on, by ChatGPT, et cetera. At AI and those things, technology is amazing. Like we have better technological tools available to us today than ever before, which is a blessing. But you still need to, and what we needed to do was go back with lack of drilling success that Maple had, previously. We needed to go back, take a look at this with fresh sets of eyes, look at the drill core itself, simplify the litho codes, for example. Like some of the things that were clear was it's a complex deposit, right? So don't lose the wood for the trees. Simplify the litho code so you can see things in spatially without a lot of noise. You can go down rabbit holes with Douai. You can say, okay, the 531 zone is the only zone that matters because this, and this, and then you miss all this other, potential for, additional high grade extensions at other zones, maybe caused by other features, right? I mean, again, deep seated, intrusive, coming up along a major structural corridor. So, I think the question that you asked about how does the model evolve, how do we approach, even the logging of the core? I can tell you, having been out during multiple times during this drill program, I've never seen such an efficient operation at our project, right? We have contractors working there. We've got our own core team. As I said, doing high quality work. It's not just about taking slash and burn when it comes to cost. If you're not gathering, every dollar you spend in the ground is designed to gather usable and useful data. I think a cardinal sin with the company in the past was not properly utilizing that data to drive better exploration results, and that's certainly a major shift, paradigm shift for us as we've gone through this program and the reset, and now as we go forward.
Okay. So, okay, I think I'm pretty sure what you're focused on. With the kind of future, if you're chasing 5 million ounces, what's the optimum way of doing that? Will you be looking for, I know, parallel trends, say, or new mineralized trends in here, or are you just going to stick with this perfect Douai package that you've got and can build the answers from what you know today? Like, how much real exploration will you be doing going forward?
I think it's going to be very real exploration focused. I mean, I think you'll see in this next resource update, anticipate seeing gains here, and think about the two zones we've just focused on here. Nika, it currently is 173,000 ounces of an overall 3 million ounce total resource, right? That's only 7%. And so you kind of look at, what does this actually mean in terms of the drilling that we've done? Like we see the potential to add significant ounces and tonnage at Nika in the underground, as with 531, which is 270,000 ounces, right? So these are smaller portions of like 60% of the overall resource at Nika is in porphyry. So if we just do infill drilling at porphyry, we're not really adding ounces, right? We're probably converting those ounces into indicated and measured, which means we're going into a mine plan on porphyry, right? That's a pretty clear signal to anybody that we're going to mine open pit at porphyry. When we do these kinds of step outs, right, we expect to see gains underground and properly domain those gains in terms of a proper, not just underground resources are determined as with the 2022. The underground resource that's in the current resource was just material that made the block model that fell outside the pit domain. right? But underground, you have to domain differently, right? It's a different mining method. It's, they're different block sizes, they're tighter block sizes, et cetera. So, I expect to see gains from Dewey based on the 12,000 meters that we've drilled. And again, some of the drilling, not the deep drilling necessarily, that wasn't really additive. But some of the drilling we did in late 2022 could certainly say, was additive to what we put out on the 2022 resource update. And I do expect, listen, it's still early, but we're working obviously on Jutel, as you know, and there's a lot there at Jutel. There's potential, as we've mentioned, for a maiden resource on Jutel. I can't quantify that today, but I can tell you that there is work happening behind the scenes. So, I think we could get a substantial way towards defining a resource that people sit up, take notice, because not only the aggregate number of ounces, but also the quality of the resource modeling, the way it's going to build and underpin the next economic studies. And it's not going to stop us just because we get to, if we think we're at 5 million and we think there's 10 million ounce potential here. As I said, the goal of having lower cost of capital is to do bigger, larger expansionary drill programs, right? That can add ounces. So we're not just focused only on, being a 10 million ounce project with just exploration. We're never going to go into development. We have to show the development side of it as well. Because I think we do actually have in these gold prices, I think we have a potentially interesting, combined open pit and potentially open underground type operation.
Well, like I tell you, the interesting thing here, Kieran, is, and I've been thinking this for a while, and, and what I'm drawn to this is, okay, not many 3 million plus ounce companies out there. Okay, start with that. And if you're working towards five, there'll be even more rarefied air. And I appreciate there are lots of people trying to do the same thing. But it's more about, I guess, the how you've set yourself up and how you write about yourself. I'm looking at the press release earlier. You're talking like a much bigger company than you are. You're doing things like a much bigger company than you are. And I'm sort of trying to understand is like, why do that? Most explorers want to, bang out a couple of drill results when they can and hope the market likes it. You seem to be, I'm not even sure you mind if the company, now if the market doesn't quite understand what they're looking at, because you're doing things the right way, and that the truth will out eventually, etc. Do you know what I mean? So I'm trying to say, there's a kind of language you're using which I think is sort of unusual for a company of your size.
It's a great observation, and this is not hubris, right? We're not trying to say we are a major mining company, and people should rate us as such, right? We have to be punching above our weight, right? In order to differentiate in this market, we clearly have the geological endowment to do that. We have the partner. We have all the attributes that say, this is a company that people should take seriously. But if we start going back to the way things were, which were, putting out one or two drill holes and trying to, extrapolate, and arm wave, as many companies do, it erodes credibility, right? And even if we go through, and nobody wants to see news deserts and long time to get between news releases, et cetera. We know it's a market that's driven by catalyst and momentum rather than value per se. But yeah, we put out 16 holes. Large companies do put out those larger drill hole releases. We focused on what was essential. We put out enough information so that anybody, large company could look at it and say, what's the program? What were the program objectives as a whole? What did they achieve? And how do these start, these holes that they drilled? If we say we didn't just, drill infill and we did boulder step outs, where were those holes? What did they intercept? What's the potential of the overall system so that we can, again, not just go down rabbit holes and focus only on Nika, only on 531. There is a 6 kilometer by 2 kilometer defined mineralization, at Dewey. But there's regional exploration, there's Utel, there's all these other things there. And it's not for the retail market. Again, I'm I've talked to a lot of shareholders over the last 3 months. We've been out on the road consistently. I think it's been great. I mean, we did at a 3 million, 10 million volume day on the day we put this news out. So I'm empathetic to the fact that people want to see, just the results, the assays, and consistent follow up, if you get 338 and it's a barn burner, we want to see another barn burner, right? And we've seen, you and I have both seen our share of companies that have a great discovery hole because it's exploration, and some of them, are able to follow up, some of them aren't, and share prices do what they do. When we expect to see bigger programs coming here based on success. We put out this to get everyone, not just, we have a lot of long, interest from institutions and strategic investors in the company that look for the longer term value creation path rather than going drill hole to drill hole. And that's why we put this result out the way that these results out the way that we did. And as we go forward, again, I don't think we're just going to say, okay, we're only going to hold on to drill results, until we got all of them together. But as we say, results are released when they're when they're received, uh, interpreted, and vetted, right, from a QA/QC perspective. And there was a lot of drilling here, right? So it's a lot to get through. But
Okay, but the other thing is obviously now you kind of secure the 100% ownership, right? You've got a kind of strategic autonomy now with the kind of the JV restructuring, and I guess control of capital deployment as well. You're going to have to, I guess, start shaping a strategy where, you know, there's a point at which economic study, a scoping study, economic studies will be required. It'll be sensible to put out in the marketplace. But to do that, you're going to need to kind of be very clear about what it is that you will want to put out in terms of those economics and getting that balance between, an open pit only or integrated underground or staged type build projects. So when do you start? Well, what work have you done on that? What is your thinking at the moment, if you can say anything at all?
Well, I can tell you we're working with an engineering company right now. In parallel with the drilling, with the resource estimate update. These things have to happen when we talk about a geomine met model. Most people may not understand what that actually is, but that's a large company approach to, not just corralling a resource and saying, okay, we've got this aggregate number of ounces based on kriging and inverse distance and all this methodologies. It's also driven by, what can underpin a proper mine plan. And when we were talking to the engineers, and we said originally when we first started talking, we're doing something as opposed to just, even though we've got what we think in a lot of cases. So we have metallurgy, right, done on the project. So we have indications that this is free milling, gold, as opposed to something that's potentially refractory. That's something that's got arsenic or other nasties in it. We need to do more metallurgical studies, but we've done, this engineering company and us, we've done gap analysis over the last month on what's there, what's lacking, what do we need to do. I expect in around the same time that we have a publicly releasable resource update, we'll have something internally that will guide us. I think if we have something that looks favorable, I mean, early next year, you could see something coming out saying, hey, we've greenlit, PEA, for example, and here's our time to completion, here's what we expect to see, et cetera. But rather than, I think it's early to do that today, because when we say we're doing trade-off studies, I mean, some of those trade-off studies, I'll tell you exactly what they are. It's open pit versus underground, right? It's, whole ore leach versus gravity, cyanidation, flotation. It's, build standalone mill infrastructure and, tailings containment on site versus utilize existing mill capacity in the region. So multivariate trade-off studies. I'd love to give everybody just the straight answer. Oh, this is economic. It's going forward. We got all this, but you want to get it right.
You want to get it right. It's all about making money. Margin is important. So
That's right.
yeah, take your time on that stuff. Right. I guess we better kind of finish off. Let's just say, like, okay, economic studies some point down the line, but right now, the rest of 2025 looks like what for you?
Drilling. So we had mentioned that there's a 3,000 meter program that's budgeted for Jutel. So the permitting and targeting for that is well underway. We certainly have excitement and enthusiasm about Douay, obviously the flagship. So I mentioned Jutel only because I think there's potential for a second flagship there. It's a big, system. It's a past producing mine complex and lots of high grade there that could also augment potential mine plans. So some drilling at Jutel. I think we're really getting geared up to go back to the 531 Anika zones, potentially as early as this fall, to do additional follow up on this concept of high grade bulk tonnage with good intercepts and thick high grade intercepts that we had as part of this early program. Um, So stay tuned on that because we will be coming back to the market with an update on what the plan is there. And definitely a resource update by year end. So you're looking at, we haven't shot our shot here in terms of, this is all that's coming. We drilled, 21 holes, 12,000 meters. Now the company's going to sit back and, just wait and raise more money and do all this stuff. By the way, we're also funded, right? So that's the other thing. We had 5.4 million at the end of March. Obviously, the drills have stopped now, so we've gotten some money back from Revenue Quebec, which is another advantage of being in Quebec. So, we're patient, but there's a lot more news coming, and I think it's as I said in my quote in the press release. The second half of this year is not only going to be news heavy, but it's going to be on news that's actually going to answer a lot of questions, right, on the deposit.
Kieran, exciting times. Stay in touch. Let us know how you get on.
Thanks very much. Always great to see you, and we'll talk again soon, I'm sure.